evening and welcome to the May 26th edition of Beyond the Headlines. My name is Colin Dowe and I'll be your host this evening. Thank you so very much for joining us. Whether you're tuned in to GBN Television, listening to us on GBN Radio, or logged on to any of our social media platforms, thank you for sharing your Monday evening with us. Our guests this evening are representatives from the Grenada Bankers Association, and we'll be delving into some of their operations and how it impacts us as customers. With us this evening, we have Mr. Larry Lawrence, who is the president of the Grenada Bankers Association, and with him, Mrs. Naomi Diali, the treasurer. Lady, gentlemen, good evening and welcome.
Good evening, Colin.
Good evening to you as well, Colin, and good evening to your listeners, wherever they are, in Grenada, Carriacou, Petit Martinique, and beyond.
Okay, excellent. And thank you for opening yourselves to educating us and being quizzed on the work as a collective in terms of the Grenada Bankers Association. But I am curious, because I've known both of you for quite some time. Have either of you worked in any other industry other than the banking industry?
Yes, I have.
You have?
Yes, I worked 1 year in Grentel, back then Cape and Wireless.
Right.
When I was Grentel, I worked for about 1 year there before I joined Barclays Bank.
Okay, so let's see that will count. And you've been in banking for how long?
About 33 years thereabout.
Okay, so 32 years. So I know you started when you were 3 years old now. Okay? So
No. Actually started my work life at McIntyre Brothers as secretary.
Right.
And I worked there for 12 years, and I moved into banking in 1995. So this year, August 1st, will make me 30 years in banking.
Okay, so we have like 62 years of banking experience between you both.
That's right.
Excellent, excellent. Larry, as president, if you can just tell us a little bit about the Bankers Association in Grenada. How many members do you have? As we look at Grenada, how many branches? Is it spread across the entire length and breadth of the state? That type of background information.
Well, the association at the moment has 3 members. Previously it was 5. It's now down to 3. Total assets under management is about 5.6 billion thereabout. In terms of total offices, I would say certainly around maybe 11 or so different office branches that the public can generally have access to products and services.
Okay. As you look, who would you say would be your biggest clients? Are you largely corporate Grenada? They have no choice, I guess. Or are you individuals, Joe Public, who would be your clients?
I would say a fair balance. It would be maybe 60-40 on the corporate side, maybe 55-45 thereabout, largely corporate.
Largely corporate.
Yes.
And how does that, was 5 billion you said?
5.6 billion.
5.6 billion compared to the asset base of the other ECCU territories. I mean, how is Grenada doing by way of assets in this industry?
So I don't have the specifics, certainly in terms of the other territories, but normally you will consider it based on the population, which of course, will drive transactions and drive asset size and portfolio. So St. Lucia, for example, you would expect that they would have a bigger asset base by virtue of the fact that they have more persons in the population. Right. St. Kitts might be somewhat smaller because, they have less persons in the population. So across the ECCU, unable to say, but certainly Grenada is up there in terms of asset size.
Okay. Is it driven? I mean, sometimes we look at St. Kitts as an example, and even Antigua, by way of population, seem to be punching above their weight. Is this interpretation an accurate one as compared, for example, to, let's say, St. Vincent, which may have a larger population, but not necessarily have that type of asset base? Is my inkling correct here?
Yes, it is. So, for example, Antigua is sort of known to be one of the territories in terms of GDP. That is one of the premier drivers of economic performance within the region. Their tourism, for example, is enviable. Of course, their location population a little higher up the islands than the Leeward Islands. So that in part will influence, how well they do. And some of them do punch above their body weight in terms of economic activity and by extension asset size.
Okay. All right. Naomi, a couple of weeks ago we got some good news. There was the press release. I must say that one bank jumped ahead of the others and made the announcement, but it was all members of the association that announced that the opening hours to the public was extended to 4 p.m. What drove this decision?
It was the case before prior COVID that we had a Friday late opening at 4 o'clock. And COVID came around and we had to make adjustments because of the circumstances COVID would have placed us and affected our personal lives. So banking hours was reduced. We have emerged out of COVID, and so when we consider the situation with the economy that is very active and bubbling in terms of certain aspects like construction, so certain sectors, that it would be advantageous to allow customers to access banking for extended hour on a Friday. So hence the 4 o'clock opening. And yes, it was a GBA decision.
I guess some marketing departments work faster than others.
I say no more.
Being the forever optimist, because one can remember when it was 5 o'clock on a Friday, and we even had more hours by way of face-to-face contact in Monday to Thursday. Can we anticipate other extensions in the not-too-distant future?
Well, we won't say no, but let us look at where we are in terms of the use of technology in business and in banking. 10, 15 years ago, an employer could not sit at his desk and hit the keyboard and send salaries into the bank that would be uploaded to the employee's account within an hour. That's possible now via internet banking. The ATMs, you could get transactions, pay bills, make deposits. And then we have our platform that's shared among the countries of the member states of the ECCU, which is the Eastern Caribbean Currency Union, that we have a very expensive but efficient system.
Well, I would want to come to that, but just prior, because I'm gonna probably preempt some of the things, but I'm thinking of what's on our listeners' minds. We had good news with the extended hours. Prior to that, whenever we got a release from the GBA, we cringe because it was about increased fees or some type of levy or something. Why do banks charge fees?
And that's a reasonable question. When we think of the word bank, the more modern expression is financial services, because we are in the services industry. And as a case in any service industry, when a service is delivered, there is a cost of delivering the service. And so for banks, we have certain real costs driving our operation. And we are in the times where, for instance, when I joined banking, a mortgage at 12.5% was a normal. Came down to 10.5%. But over the years, through competition, good healthy competition, but the changes in the dynamics of how bank cost, we were able to see with the minimum savings rate also going down from 4 to 3, then to 2, we are able to afford our customers much lower mortgage rates. Now a customer could, a normal course of business, get a mortgage rate of 5.5%, 5%, and sometimes sub 5, many times sub 5 if there's a special offering.
So was it the case, I heard Larry spoke of an old employer who had a monopoly, and with that monopoly fees were extravagant. Is it that the 12% was extravagant, and hence because of the competition, coming down to 5% is more a reasonable cost in terms of charge for mortgage, and hence being able to not just recoup but make some profit on it. Or is it the fact that your operational cost has gone down, which has afforded you the opportunity to move over the years from the 12% that was normal to the 5.5% that we see as being quite common now?
And that's exactly the opposite, you know. Our operational costs have been going up. Inflation, regulation, and other things that impact our operating cost. But at the same time, the way loans are priced, it's different than it was many years ago. So you'll find spreads are much slimmer on loans. So interest income on a loan is much slimmer than it used to be many years ago. It's just the dynamics of how the global financial system has evolved. And if we have to be competitive, there's no choice.
If there wasn't still reasonable profit, banks would have probably have closed their doors. So is it, yes, operational cost has increased. Yes, due to competition, you'll have reduced on your interest rates. But at the same time, maybe your asset base has also increased, and the volume has increased, which will have allowed you to reduce on your interest rates, recognizing that because of the spread, you're still able to recoup and be profitable.
And that is true to a certain extent. Volumes, and as we all know, the financial system grows in tandem with the economy. So if we have a GDP growth of 3.5%, 4%, 4 to 5% consistently, you will find the financial system that is really the nucleus or the support to the economic growth will expand. At the same time, you will still have that cost to deliver the service growing, because many times when we look at the sort of cost structure we have now, years ago we didn't have ATM cost structure.
Right.
We didn't have internet banking cost structure. Those costs now have been brought on because persons are no longer satisfied with just having a bank account or having a loan. They want access to money 24/7.
Right.
They want that money to be able to be at their fingertips even though they're on vacation and run out of spending money because they shopped a lot.
Right.
So here we now have the international debit card. We have the credit cards meeting those needs. So all the changing dynamics of our society dictates that the banking sector evolved to meet those needs and surpass all of their customers.
Right. Sometimes we've heard discussions on the fees, because I'm still coming to the fees. We have fees when we do the face-to-face interaction, and one understands this because you are utilizing an employee who's, has the health benefits, etc., apart from their salaries. But when we access the ATM, there's also charges. Isn't this like double dipping? I mean, we remove ourselves from forcing the banks to have additional employees because we're doing the transaction ourselves through the ATM, but we also charged for using the ATM.
And probably when we look at the cost at the ATM, maybe much lower than if you come into the branch.
Correct.
So the dynamics of how the service is delivered, whether in person or via technology, then you'll find a differentiation in price. Most likely because the cost of delivering that service electronically is cheaper, because it's really not just pull out of a hat. You look at the cost of delivering the type of service, and as a result, you would stage the bank fee accordingly.
Okay. And either of you can respond to this in terms of what are some of the factors that influence the fees that are charged by banks?
Yes, I'll carry this on, Naomi. So cybersecurity, for example, we have to keep customers' information safe, their savings, their monies safe. So we have to also have top tier cybersecurity, and that cost a penny and a pound, for us to provide and to give customers the assurance,
right,
that they can rely and continue to rely on the protection that we offer.
Okay, so cybersecurity is one I think we can
There's
understand that.
Compliance, right? We are a heavily regulated industry. By extension, you realize that we cannot close our doors without getting the permission of the central bank, because of course you have the public's money and the public should have access to their funds.
Right.
All right, so there's increased regulations over the years in order for the environment to be safe, for the public to have the assurance, that their monies is safe. So as a result, the central bank would have regulations which change, which are sometimes imposed externally. Basel I, we've transitioned recently to Basel III, which of course have increased levels of reporting into the central bank. So that's one. Two, then there's also elements such as we have the ATMs. The customers expect the ATMs to be intelligent. It has to take in deposits. It has to be able to read, the monies. You then expect when you go to the ATMs also that you're able to carry out multiple transactions. I think at the moment the only thing the ATM is not doing is dispensing US cash or foreign currency, and that is something that customers even now are expecting us to be able to implement, right? So it's a work in progress. So again, it's to say that across these three facets, for example, the cost is quite astronomical. It increases over time. We would have noticed, for example, in 2022, the cost of, say, magnetic strip on the international debit card, to make it tapless, for example, used to be $8 a pop. It's $28 and $30 now. So we have the inflation, just the general increase in goods and services that over time adds up. And what we believe is that if one considers value, value means that there's a fair exchange in terms of the convenience that is offered and what the consumers think that they're paying for, right? So if there's a fair exchange, then we think value is exchanged or value is conferred, from each party. So from that point of view, we have been able to provide the services, migrate to a operating environment where customers continue to feel safe, right? Notwithstanding that time has marched on, banking has marched on, technology has marched on. We've seen what I'll consider the consolidation of sorts of the industry, where you've moved, I think in the beginning I talked about 5 banks, down to 3 banks. In part, again, it's of competitive pressures. The view has always been that the regional and the indigenous banks have outcompeted, the foreign banks, which has seen them exit the market. So, of course, what the public expects is confidence in that if we are not successful, if the banks are not generating a return, then the public can lose confidence. And then again, what is confidence? The simple matter is that a firm belief in something or someone, right? And then confidence, we must continue to inspire confidence, which is then the public would expect that, a fair exchange, a fair return by both parties.
All right. As you outlined, some of the operational costs, which is what would result in your charging fees, and it's placed in different places, but you do have overall operational costs. Let's focus in on cybersecurity. What does that entail? Is it a local firm that you hire? Is it in-house individuals? Is it part of the ECU system that is shared among banks? When we think of cybersecurity, keeping our information safe, keeping our money safe, what is the investment being made by each bank?
Right, so it will differ, of course, from institution to institution, but generally, the security is provided by external parties, right? External service providers, right? That we would have contracts with, right? There would be things like ensuring that you test the system. So sometimes you have to hire someone who then tries to penetrate your system. You have to create firewalls, persons who are monitoring the firewalls on behalf of. So we sit here, we are having the privilege of this conversation, but there are parties who are monitoring the firewalls at this time to see if there is anyone who might be attacking, the firewalls, and ensuring that, there are fixes or defenses that are enacted. So it always had to be top tier. Banks go so far as at times when you hire that external party to try to breach your systems, and then they will provide you with, say, in a report, which then says these are some vulnerabilities we see. Right? It's rated in terms of risk, high, medium, low, and then you get time to then fix it. Right? You have to then engage your service providers who helps you to engage in a better defense. So it's all to say that it is quite expensive, right? It continues to change because you would be aware, that the persons who are the hacksters, so to speak, or the nefarious individuals, they continue to evolve, they continue to adapt, and as a result, banks have to be at the front, or what they call the cutting edge of cybersecurity.
Okay. Not going to relate to Grenada, but from an ECCU standpoint, have we had any breaches, whether it is to actual monies or to data, customer information, in the, let's say, last 5 years?
Yes, so I did hear of something up the islands, right? And not too long after, we did have the central bank, which would have gone out to all of the member territories, making inquiry, and then they would have come with some guidelines subsequently to indicate or to state that we are required, if even we suspect, to report it to the central bank, so of course you can have the benefit of that sort of collective learning, and then they in turn now can warn, other participating members of the potential threat that might have been experienced in one of the islands.
Okay. The other aspect that Larry mentioned, Naomi, was one of compliance. What are the challenges and hence costs associated with compliance, by virtue of which banks are forced to recoup through fees to customers?
Yeah, that is a very topical issue, and it's always evolving and emerging in more and more compliance requirements. And those things are not generated locally, those demands. It's international. And so for Grenada to be seen as a safe place to do business, Grenada must pass laws and regulation, what we call anti-money laundering legislation, to combat terrorist financing and that sort of things. And so since the wonderful time of 2011, when that unfortunate terrorist attack happened in New York. 2001.
Yes.
Well, I'm just wondering, that date sounded wrong. So 2001, banking has changed, and it's changed forever. Because no longer are we waiting for to find out how the terrorists may fund the activity, but we constantly have to be surveilling our customer base and who we are onboarding constantly to make sure we're not part of that chain that could end up funding a terrorist attack.
Let me ask you about this, because one of the things, I guess one of the items that you work on towards this compliance is source of funds. In the US, we commonly see source of funds being requested for $10,000 and up. In Grenada, we sometimes see this request coming for 10,000 EC, and on occasions lower than this. Why isn't it comparable? If in the US it's 10,000 US, one would expect if the US is imposing anything on us, and I'm saying the US because I'm assuming that's the lead, why aren't we speaking of the same 10,000 US? Because 10,000 EC almost doesn't sound like money to fund a major crime operations. So it's more like headache for the customer, whereas the family member in the US will not have to meet that same low threshold of the 5,000 US or 4,000 plus if we do the conversion. Why the difference?
Compliance has evolved to not just saying, oh, the limit now, and everybody knows or heard about this limit of 10,000 US. When we started that process, probably that was the case. But the new requirement is that you know your customer. And that customer, their norm, maybe 3,000 EC. Because when you onboarded that customer, you ask them, where would you be generating your funds? From salary, from a small business? Can you project, if it's a business, how much you expect to earn from that business? And that is now put as a parameter for the customer to monitor that customer. If that customer suddenly comes, not with 3,000, but with 10,000, there's a need now to ask a question, hence the source of funds.
But why? I mean, in all honesty, is it the bank's responsibility to invade my privacy as to why this month I did well and have $7,000 as opposed to the $3,000 I'm in the habit of generating?
And it's not our intent to invade your privacy at all. But as we rightly said, it is the process of knowing your customer. If circumstances for that customer have changed and they're now earning more money, we are happy because then we could get a loan. It's a potential loan.
It's opportunities, right?
It's opportunity.
Right.
But all we're required to do really is understand what has evolved for this customer and put it on our record. So if upon the source of funds they're now saying they have had additional or expansion in their business, then we ask, give us your new information, and that's it. That stays there. So we don't need to go and say, okay, we check that you used to have a 1 acre farm and now you have a 3 acre farm. Your declaration is your declaration. We'll test it somewhere along the lines if you're consistently coming with more and more and more, because you make mention of why get involved in your privacy. Terrorist financing has been so subtle now that they're using the non-profit organizations as a conduit, and those contributions via non-profits small. But volumes over time could be in the millions. So we can no longer just sit and say we're sticking to a limit, and once you're above the limit, you're under the limit, we have no problem. It always has to be go back to who's this customer, how are they generating their funds. As I said, know your customer.
Know your customer, where did this concept come from? Because it's, you know, in the olden days, know your customer and Grenada is small. You know your customer. Now it seems to be, and some customers believe, where you get that money. And you're almost being accused of being involved in something illegal. I mean, I'm just talking about the impression now.
I know.
And then the long forms come out in order for you to complete, just to do a simple transaction of a deposit. So where did this come from in terms of its origination, and why must we, meaning the local banks, comply? Can't we push back and say it's, in terms of our culture, this is insulting, we're not going to have it. If you have a problem out there, solve your problem, don't do this to us.
Okay, and we very much understand a customer who might be upset about the forms. Because it's not the norm. Everybody knows Johnny down the road and he does his small shop or whatever. But the fact of the matter is those procedures are embedded in legislation, passed in our parliament. And it's the players behind it goes way back beyond central bank, goes beyond the regional, it goes into the international sphere. That if Grenada doesn't want to be blacklisted or grey listed, they must have certain legislation on their books. And these are the expectations in terms of what that legislation should look like. The it's even compared to what obtains in the international and regional market. And if you try to stick out as a sole term by making the system easier for a person who probably have bad intention, you could, as a country, receive fines, lose. And for banks, we lose correspondent banking relationships, which really is the key to our operation, cross-border operation,
right.
And we can't afford to lose those relationships.
Okay. Larry, from your experience as an association, has these measures been working? Or are we still seeing people not financing terrorism, but other forms probably of money laundering? So maybe involved in some illicit trade, and they create shell companies, etc., in order to facilitate deposits. Are we really policing the system, or are the ones who are under pressure is a small man who gets some money through remittances or make a sale are the ones really under pressure, and those who are looking to subvert the system are going about their merry way because of this pseudo companies, etc., being created? I'm not going to call any industry at this time.
So we think we have been pretty effective in being able to prevent or avert any of those risks, from coming to bear. Why? Because we have not had incidences as far as I'm aware. And what we do find is that because we know our customer, the same shell companies and so on, we know who are behind the companies who open accounts with us in their personal capacity. So we have to drill down. We're required by law to drill down to know who are your UBOs or ultimate beneficial owners. Mm-hmm. So as a result, we do believe we have a firm hand on understanding transactions. Naomi spoke earlier to the correspondent banks. Because we know our customer, because when we open that account, we ensure the information is up to date whenever there's any what you call unusual activity. So for example, somebody depositing above the 3,000 that Naomi spoke to, below the 10 but above 3, right. That might be deemed unusual, mm-hmm. but not suspicious. Essentially, the source of funds, the customer make the declaration and we move on. Now, when a correspondent bank will ask us a question about a wire transfer that was initiated, very useful that at a moment's notice we can respond to them. So they raise a query because of some transaction that we initiate going into the correspondent bank, and because we know our customer. So it's not a case now that something has been flagged as something pretty innocuous, maybe no reason for alarm, but the correspondent bank would require some information. Very useful that we know the customer, we know where to find them. The information is best if it's on file already, so you can immediately share. So as a result, you tend to avoid there being any suspicion or the correspondent bank raising your risk levels, over and above low and normal. And we've enjoyed that for so long, and we very much intend to continue to do so.
Okay. I'm coming from the customer service and customer appreciation standpoint now. So, company, let's say non-profit, attempting to open a bank account or change signatories to the bank account. They are clients of the bank, but invariably the bank then asks them for all of their business all over again, although they have active accounts with the bank. Why is this measure in place? And from a customer standpoint, quite often frustrating to the customer, because I'm not new to the institution. If I was, I can understand it. But if I'm not new to the institution, why do I still have to go through this?
So there's typically a requirement for us to refresh. And Naomi spoke to the proceeds of crime legislation, right, which has in there the anti-money laundering guidelines, and we are required to for customers all accounts, low risk accounts, every 5 years, medium risk 3 years, and for high risk customers every year. So typically there's a requirement to confirm address, to verify address. After a certain amount of time it becomes dated, you're required to refresh it. Of course, you appreciate IDs invariably expire and time flies. So upon the occasion of a customer reaching out in order to do new business, then we are typically required to refresh the information. And what you find is that the information that they provide, we're able to update the existing account, which is of course on file already, because time flies and the information become expired or stale dated.
Okay. I smile in terms of the provision of IDs because I know some individuals, if they come with a driver's license that has not being paid upon recently, the banks would refuse them as a source of ID, although it is a national ID, and it still is a valid driver's license, just that they are not paid, and there's a distinction between the two. But because it's dated March 2025 and we're in April 2025, then that is refused. For the customer's sake, why that? Because if the ID is to say, I am me, and if it's saying I am me, why is it refused?
Right. So we did have some very earnest conversations, I think, in last year at the central bank when they had the annual licensed financial institution meeting. And the banks debated the point you made, right? But the central bank would have indicated that for an ID to be valid, it cannot have expired. So yes, I can look at you and I can look at it's recently expired a year ago, and I know for sure it's Colin Dowe. But because I think the guidelines, the legislations require a valid ID, and a valid ID needs to be one that's not expired, then we require to get an ID that has not expired.
Okay, all right.
And, if I may, and that's why in recent months, as we coming on soon with the credit bureau, regional credit bureau, the ECCU member banks have decided that the NIS ID will be the principal and primary ID being requested by financial institutions.
Okay.
Because if you notice, you pull your NIS ID, there's no expiry date.
Right. Okay.
So that could stay on file.
That relieves any issues.
Exactly.
Okay.
So that could help you. Don't ask for the expired driver's license.
Very well. All right, it is time for our first break. So viewers and listeners, we'll take our first break and we'll be right back.
It's time to give praise while having fun and extraordinary family time. As PAWI, P-A-W-I, Grenada District presents Sports and Family Fun Day, Saturday, May 31st, 2025. Lassages Playing Field in St. David. It's going to be an exciting day filled with athletics, cricket, football, dominoes, cards, draft, and many more. There's always amazing deals. Flea market will be available together with a variety of eats and drinks on sale. Activity starts at 10 a.m., 10 in the morning, and goes until 6 p.m. Come out and be part of this wonderful day of fellowship as PAWI, Grenada District Sports and Family Fun Day. Saturday, 31st May. Don't miss out.
Looking to shop online from your favorite stores like Amazon and Shein? With GPC Global, it's never been easier. Get your very own US address and shop from around the world. With GPC Global, you can order the latest trends and must-have items, all delivered straight to Grenada to your closest post office for your pickup. We offer the cheapest rates, and our service is reliable and quick. No more waiting for weeks for your packages. Your satisfaction satisfaction is guaranteed. Join the Grenada Postal family today and start shopping smarter. Visit us online at www.grenadapostal.com or call us on 437-POST. That's 437-7678. GPC Global, your gateway to the world. Have you heard about the new Softweave bathroom tissue with total hygiene? As hygiene and safety have taken center stage, our bathroom tissue is now manufactured with 3 different technologies to offer the best protection for you and your family. UVC light technology for a safe and effective disinfection process, eliminating 99.9% of microorganisms. Also, production at high temperatures, killing all types of germs and bacteria. And it's pH controlled with delicate fibers to prevent irritation for even sensitive skin. Softweave Total Hygiene Bathroom Tissue, available in supermarkets and shops island-wide. Visit Softweave Caribbean Facebook or Instagram pages for more information.
Whether you're refreshing a bedroom or giving your home a bold new look, the Color Shop has the perfect paint and tools to make it happen, inside and out. With quality finishes for every surface and accessories to match, we make painting easy from start to finish. Whether it's a DIY weekend or a contractor starting a brand new project, the Color Shop is the trusted choice.
Welcome back, viewers and listeners, and we're speaking with representatives, the president and treasurer of the Grenada Bankers Association this evening. Naomi, we addressed a couple of things. We address the cybersecurity, we address compliance as some of the key operational costs of the banking industry, and hence the need for fees. What are some of the other costs that we would like to call to the attention of the listening and viewing public?
Okay, I want to make it as simple as possible. That when banks exist in a society, they have to be ready for any disaster that may come our way. Hurricane, could be earthquake. Suddenly your assets, your loans become liability because they no longer could generate income to pay back. The customers cannot pay back those loans in a crisis. So prior to the financial crisis that happened in 2007, 2008 in the US, banks will make profit, put it aside in retained earnings, continue to lend against those assets, and if there is a crisis, then they respond. They start doing provisioning for loss and that sort of thing. Now, the new international financial reporting standards require the opposite. Coming out of that crisis, it was discovered that banks were not adequately supporting their loan book with the capital. With what an old banker, whom I admire a lot, says, put wool on your back. Right? So in the event that things get difficult, you could still withstand that shock, that financial shock. And so banks now are required to look at the loans that they're onboarding at the time they onboard that customer and extend that loan. They're required to risk weight that lending. Is it to government? Then it's risk-free. Is it to a business that's new? Then there's a certain amount of risk to that. Is it a residential property? There's a certain amount of risk to that because that client could lose their job. That business could belly up. And so that risk is represented in putting aside retained earnings in many times in buckets that the bank cannot touch in terms of unlending that. So they have to put aside that capital in the event of that disaster.
So if I'm just to understand this, there are different, once you have a loan, in the case that the loan becomes non-performing, you have to protect yourself.
Yeah.
And in so doing, there is a percentage of your, let's say, profits that you set aside to make sure that your operations are not disrupted by virtue of non-performing loans.
Yeah, exactly.
And we're not here necessarily thinking of delinquency, but rather in case of disaster, etc., where people's lives are disrupted or the country's economy is disrupted, but still the other members of your institution, other customers will be calling on you. When I go to the ATM, I want to be able to withdraw my money.
Exactly.
You can't tell me that there was a hurricane yesterday. That's why I want to withdraw my money. And if just trying to relate it and make sure this is relatable. Go ahead.
Yeah, actually, let's look at it another way. We hear a lot of the word called resilience, right? Another way to consider resilience might be toughness, your ability to absorb a shock,
Right.
in terms of the earthquake, the hurricane, but still continue to operate, because when you come, you need the ATM to be up and running, you need the offices to be open. So we want to be tough. And in order to be tough, for most families in Grenada, you know, your grandmother might say, when you start to work, you want to set aside 3 months savings. You want to set aside 6 months savings. You have some families who are more risk averse. They want to set aside 8 or 12 months savings. So if the major breadwinner loses his or her job, you have that money set aside, so it continues to allow you to function, to pay your bills, to have a reasonable standard of living until such time that you get another job, until such time that the economy rebounds. So what banks are required to do is to expect credit losses in the future, and you are required to set aside a percentage of, as you onboard the risk, which is the loans.
Right.
You have to set aside a certain portion from your profits for that year to reflect that you have that risk on board, so that if and when there is that shock, you have that cushion. And again, we spoke to the public must have confidence that the bank will be there. And then through the regulation, and as Naomi spoke to IFRS 9, I do believe, there's expected credit losses and setting aside that for a rainy day.
Okay. You know, and as you're speaking, I reflect, and I know that you may not be able to comment on this, but the Clico-Bico collapse. And we saw customers in some territories getting some type of compensation, and those of us certainly within the ECCU, although it was not a bank, the likes of a Garfin would have been governing them, we saw nothing, because there was nothing set aside apparently in our territories to withstand a shock. So for the people who would have suffered, is this a good relatable point as to why the bank needs to be doing this type of thing?
Definitely relatable, because we know the pain of loss when you have your hard-earned savings put aside for a rainy day, for your pension, to look after you in your old age, and it's lost, it's gone up in smoke, that pain. So when I reflect on how we have gone through financial shocks over the years, we had Ivan. And as if I could recall, government saying $2.1 billion impact on the economy, right? Ivan was a huge disaster for Grenada. We had insurance funds come in, but at the same time, the banks were able to extend moratorium to customers. Some got as long as 1 year, depending on the extent of the damage. And that moratorium period expired, and then the customer was able to give an extended time to repay that loan. That is not possible if the bank was not adequately capitalized, or, as Larry says, resilient to that shock.
Right. And we went through similar in COVID, because likewise there was a moratorium granted there. There was some argument because the interest rates capitalized and was waiting on us, so there could be some discussions there. But the idea is that that type of relief was provided to customers, which means that the bank had to be resilient, so because you still had to function knowing that there will be no income for 6 months, for 12 months on these loans.
Yeah, that would have impacted the bank's cash flow.
Right.
Because the interest income was not coming in.
Okay.
It's there accrued, but not coming in.
Right. just share with us, are there any other major calls on the bank in terms of operational costs that require the types of fees that we're seeing and we experience?
Nothing major. I think we cover technology, we cover compliance, we cover cybersecurity, and just the technical support that banks must operate on now. The cost of IT costs is the one cost, we are short every year we pull the budget. That cost is going to go up 20%.
Okay. But wouldn't IT translate into savings for the bank? The ATMs, aren't they translate into savings for the banks? And hence, why should a customer see this as a major cost and hence call on for fees when technology ought to bring about efficiency ought to bring about savings, and yet still I have a fee? How do I, comprehend this?
Remember at the beginning we spoke about the equation of banks being structured mainly to receive their profits from interest earning assets, right? And that was a comfortable situation because the spreads were much wider. And then we talk about competition, the way the global financial system works, the interest rate spread was shrunk. So it's like if you now have the pie, remains the need for the bank to gain that income to be able to be profitable and resilient, but we're now sharing up the pie differently. So before, the pie used to be 3/4 interest income, and non-interest income was, which is fees, was a quarter.
Right.
But now we have a more balanced pie where interest income and non-interest income pretty much equates in terms of how the bank's income stream comes in to meet its cost. So it's a different dynamics. So a customer who enjoys a reasonably low mortgage rate and now could afford probably a little more size in terms of building or finishes, if that rate was higher, they probably could have only done a 1 or 2 bedroom. Now they could do a little more. But at the same time, as you interact with the bank, just as any service, you choose which service I would use at less cost or no cost. So we could go into that, how we have that pie has changed and how we have structured fees in such a way to assist the customer to balance their needs in terms of how they want to spend and how the fees will affect their pocket.
And I think this is important to note. So how can customers manage their fees? Sometimes we believe we don't have a choice. The fees are just levied against us and that's it. How can customers manage their fees? What are some of the strategies? So
we want customers to research, customers to ask questions. The information is readily available, on the website. Information is readily available by post and asking a question at any of the branches, where through just inquiring and becoming edified, customers can manage how they can use the less expensive or least expensive option in order to do their banking. So just to add further a little bit to the question you posed about why would IT costs, if IT cost is increasing, then by extension, should fees not be coming down? What we have found is that we've had to keep systems running parallel, right? Transitioning from First Caribbean to go to the cooperative bank, and you listen and you go to the Bankers Association and you hear the stories. They tend to be pretty common, right? When you listen to, you're being regaled by stories, is that customers have been accustomed to see the bank books right? And it took a very long time, notwithstanding the ATMs were there, the ATMs are printing out, the receipts. I can give a story of my dad in particular. My mom would withdraw funds for him, and he would get the slip, he see the amounts, he see what the balance is, but he wanted to see bank book, right? Now, just to say that...
With the bank write down that
yes,
number.
Yes, the bank write down that number.
So you are verified
yes.
that this is the amount of money.
Exactly, right? So it's to say that the banks then have to sort of run parallel systems, notwithstanding that you have the ATMs can provide the information, but there's some customers who wants to come inside the halls, stand in line, go up to the cashier to receive the service. Then the ATMs are there, the ATMs are also there and they're operating. Of course, you have the online platform that's there and operating. So you find that having to run all the systems parallel, it's not a case where you switch off one and you're using the other. So by extension, we've not been able to sort of manage the cost down as might be expected, because all the systems are expected to run parallel, because you find customers who transition, who go to the ATMs, frequently don't come into the office, but a lot of customers, maybe the majority, still continues to come into the office. So the cost doesn't necessarily diminish, with the fact that you put more technology on.
Well, why are they coming into the office space? And has that number, I mean, I can understand your dad, and probably from the old school, and hence, the trust to technology isn't there. You have stopped sending statements out in a lot of cases, or moving from monthly to quarterly. At least you've cut down on the paper and costs of postage in that regard, and that has given my dad some frustrations right? as well, right? But the idea is, are we seeing less people come into the banks, and hence the need for the parallel platforms being reduced?
So no, we have not. And a very personal story, when I went to Turks, you heard stories that customers come to the bank because they see each other. So it's a sort of social occasion. Right. Of course, I took it to the pinch of salt then, because it was not relatable to me at the time. Mm-hmm. But being back home, I kid you not, maybe February or January this year, just having a bit of a chat with my mom about her going to town. She is retired. She really genuinely loves to meet up on persons. That's the only opportunity she gets to see them, and they get to talk. So for her, it's a social occasion. Mm-hmm. So what we found is that, and then of course, customers are a little challenged at times, especially the more mature customers might be challenged with using the technology. I must confess, in terms of the Bankers Association, and within the association, we've admitted that to ourselves, where we have not done sufficient of a good job to demystify the technology, mm-hmm. To help the customers feel comfortable to use it. So sometimes you walk into the branch, you may have a member of staff approach you, but sometimes it's in the presence of other people, so that you might be a little timid, right. to take on board new learnings. Mm-hmm. So sometimes it's really about creating the infrastructure, sometimes to take you aside, bring in a booth maybe within the office itself, where you get to then see how it operates, how it works, how easy it is to work with the phone that we most typically tend to have. Mm-hmm. And so demystify it and make it really applicable to customers. And of course, that same customer who now gets comfortable doesn't come back anymore, right? Over time, maybe the first, second time, and you get comfortable. Mm-hmm. So it's just to say that, yes, we can do a better job. We have not. And coming up for I think in October, when the Central Bank will have the Financial Awareness Month, we do certainly intend as an association to, spend some time to help customers, to be better edified, insofar as financial
Is this only the mature customers? And I probably can come in the defense of the mature customers now a little bit, right? But are we also seeing youngsters? Because the reality is our mature customers are a minority of our population, right? And some of them are now at home, right? are we also seeing youngsters, for whatever reason, whether it is not being au fait with the technology or a lack of confidence? So employer transfers money to employee's bank account. Employee comes to ATM or comes into the bank and take out all the money. Is this a lack of trust within the system? How can we improve the confidence, either in terms of the technology itself and hence the reliability to access monies, so that the face-to-face interactions are actually reduced, which as would result in all of our fees being reduced?
So I'll go first, but I'll want Naomi to also chime in here. We do find that, be it young, be it mature, that customers sometimes tend to listen and hear what each other say, and they may not necessarily do their own research. Right, so in terms of the confidence of using the online, the electronic platforms, electronic channels, sometimes they might hear a story, right? They rely on what they've heard and not necessarily tested themselves, And of course, as I said, we've done really what I'll say a piss poor job in terms of the change management. We sort of build the system and we sort of hope that the customers would use it, as opposed to sometimes
Field of dreams.
Yeah. As opposed to sometimes, just putting the infrastructure in place, understanding our culture, understanding is something that's new. And generally, be it for older, younger, change is something which takes time. It has to be reinforced with, with a behavior and a practice. If you consider the table, and I think early adopters is 4%, and then the late adopters tend to be, but the majority tends to be that bell curve of sorts, So it's just that understanding that, then we should do a better job of helping customers break it down, helping to make it more relatable to them, so that they transition, into coming into the office, or believing they have to come into the office, into the technology.
Yeah, one of the things I think influencing that still heavy influx of customers into the branches is the persons are still very much tied into checks and cash.
Right.
And just this week we were talking about that. How can we move Grenada as a country into less cash? I wouldn't say cashless, because there are territories not far from us that have gone cashless. They're much more advanced digitally than us, but less cash. So an employer, a contractor, have 20 construction workers on his fortnight, and he sends their salaries to the bank with a list, and everybody comes and get that cash. And when you inquire, nobody wants to leave any money on an account, or they do not have a bank account.
Right.
So we seem to have a growing...
But we also have a challenge where, because I'm not banking with your bank, then there were additional charges, etc. There were almost some tensions between the banks, which is why I come with my ID and I take all the money because I can't deposit here or that type of thing.
And that may be true for some persons. They don't have an account with you, so they need to take all the money in cash because that's their employer's bank, not their bank, and then they bring it elsewhere. That may be true. But when we look in aggregate on the Grenada market, there are a lot of persons who just do not operate bank accounts. And if they open one now, in 6 months' time, that account is zero or minus. Because the same avoidance of fees, but they choose probably not the right account to open at the time, because there are accounts that will have the lower fees.
And how do we know how to avoid or minimize fees? Because I don't believe that the bank is in the business of telling me how to minimize fees if that's going to impact the monies that you bring in to handle your operational costs. So are these lower fees, are these minimal number of fees actually accessible to the population?
Right. So recently the ECCB launched what we call a first step account. And all countries within the ECCU, the member banks, would be bringing on those accounts, those type of accounts. Right. It's a first step because there are restrictions on how much funds you could put in, as well as there's a simplified onboarding process. So that's a new. In that scenario, there's a no fee. Yeah. Right? So our central bank has seen the need to encourage persons to come off the sidelines of being unbanked to being owning a bank account.
Yes.
So that's a progress. Individual banks, we wouldn't speak about what each are doing here now, but individual banks would be wise to look at accounts within their suite of savings account that they could do low or no fee, and that exists. What we're saying there is that the customers could access it, but as Larry says, the education process needs to get better. Right. So we are starting that process, and at my bank I've seen persons get more au fait with what account they want to open, if it's a transaction account or account where they want to build wealth, or savings account which has a different fee structure. So their choices. Being educated as to those choices will help persons to minimize or avoid transaction fees. Okay. And those fees, those options don't come into the bank, stay online and at ATMs, because that's where we're pushing the digital transformation. Let persons go towards the digital channels, where we think if we get a wider cross-section of the population to bank digitally, the cost will come down.
Okay. You mentioned moving Grenada to a space where we're using less cash. We may not be cashless as yet. And hence the point of sale, point of service, utilizing your credit cards, debit cards becomes more important. We still see, however, we are penalized 3% for using our credit cards at some entities. So it doesn't seem as though we escape the fee, because here we are moving without cash, pull the credit card, and all of a sudden the call on you is not the original bill, but it's the original bill plus 3%.
And you mentioned this, and it's a very good point. That's against Visa and Master rules. When we become aware of a merchant that carries on those business practices, we warn them. You ought not to put any cost to the customer. There's a cost to doing business. And that same merchant now have a device that allows him to bank automatically. I don't have to employ a cashier to count the cash. I don't have to wonder if this cashier is going to walk away 20% of my profit. I don't have to wonder if somebody's going to hit me in the back of my head when I'm going to the night depository in the night, security cost, risk. That machine now allows you, by next day your money is in the bank. You don't have to stand in line. So if there's a merchant fee, which we call a discount fee, charged by the bank who's managing the network, if you look at what you pay on that point of sale transaction, as opposed to doing all this thing, collating the cash, making a deposit, running to the bank before it closes, or using iDepository, it's a saving. And it gives the customer the convenience of not saying, oh, I run out of cash, I need to buy. Because that has happened to me in the past, And you know what I did? I walked out, left the goods right there. I'm going to go to another merchant that's not going to charge me 3 or 4%, because I know it's against the rules, and I told them it's against the rules. If you want to stick in those old age way of doing business, then somebody else is going to get my business. So customers have a choice. I know sometimes when you're way deep into the transaction, or you may have eaten the meal.
Well, that's what I'm doing. I mean, there's one thing with the goods on the counter. If I've already eaten, then what do I do? Because I don't have cash. It's only the card. Walking away, they would call police for me, and I think in this case, rightfully so. Probably will both be charged. They for the illegal transaction of the 3% and me for attempting to abscond on the bill. But we both will be in trouble.
But we need to bring Grenada in that modern era where in bigger countries, even the person asking for a donation for playing music in the subway has something on the guitar and you just tap and give him a contribution. That's just par for the course outside of the Caribbean and within the Caribbean, Barbados, Trinidad, everywhere. Point of sale is just a standard. St. Kitts. We are doing a comparison with the ECCU. And do you know, Grenada is known as having the most cash and check transactions than any other of the islands.
And that's not necessarily a compliment I'm getting.
No. We are refusing to evolve into the digital age.
Okay. I will take note of that. It's time for our next break. So we'll take a break and then we'll be right back to, with the members of the Grenada Bankers Association. See you shortly.
Attention all divers, snorkelers and underwater enthusiasts. Effective May 15th, 2025, all visitors to the renowned Mullinair Underwater Sculpture Park will be required to pay a small fee of US $3.50 or EC $10 per person. These fees are essential to support the ongoing maintenance and repairs of the sculptures, as well as the development of new features to ensure the park remains a world-class attraction. Payment can be made through the Grenada Tourism Authority's online payment portal, available on the Pure Grenada website, www.puregrenada.com. We thank you for your support in enhancing this extraordinary underwater product. This announcement is brought to you by the Grenada Tourism Authority and the Ministry of Tourism, dedicated to protecting and conserving Grenada's resources for the enjoyment of all.
GRENDEC Community Partnership Initiative.
On behalf of the Grenada Athletic Association, we want to thank GRENDEC for the presentation of their check. This is not the first time that they are supporting our character games. I can remember clearly in 2016 they were part of the celebration. They have been there with us and we are very thankful for that.
GRENDEC, energizing our community.
Project Music presents Rhythms of Spice. Sunday, June 1st, 3 p.m., Comahan Park. Featuring student performances Alpha One, Cool Jazz Band, Co-op Band Comancheros, Lion Pride Percussions. Project Music with Tira Etienne, Shireen Brizan, Jeremy Hector, Javon Andrew, and Sonika McKee. With special guests, Hickson from St. Lucia. Get your tickets $60 on sale at Grenadian Optical, Art and Soul, Kittens Pharmacy, Grenville, and Goto Fed. More at the Dowe. Children 12 and under free. Rhythms of Spice, Sunday, June 1st, 3 p.m., Comahan Park. Sponsors Co-op Bank, Renwick & Thompson, Hubbard's, Fire and Foods, Inter-Caribbean, True Blueberry Resort, Acado Grenada, Gabriel's Rentals, Andrews Construction, Supreme Sounds, DJ Danny, GBN, Boss FM, and Real FM. Absolutely no offending.
Welcome back, viewers and listeners. This is Beyond the Headlines, of course, and we're speaking to the president and treasurer of the Grenada Bankers Association. Larry, why is this conversation important to be taking place now? We're discussing quite a bit on the fees and educating the public, but why is it important at this juncture?
I will describe it as a Chinese proverb, I think, that says the best time to plant a tree is 20 years ago, and if not, the best time is now. So the banks are contributing members of the society. We do a very important function called financial intermediation, where customers come to the bank and they deposit. And we, as banks, the stewards, the custodians of the money, we want to efficiently allocate it based on the right type of lending opportunities. So banks then, being a functioning member of the economy, we are required to act responsibly, and part of that is having a conversation about the service we provide, having a conversation to inform customers, to help customers to themselves make better decisions, about the products they choose, about the financial products and services, that they seek, to help them to participate in credit opportunities.
Please don't call me a cynic here, but is this conversation a lead up to soften the ground for more fees to come? Because you come, you say we have cybersecurity, we have technology, we have this, we have that. In 2 weeks' time, I'm going to be getting another PSA saying, fees have moved by X amount.
No. That is not at all the intention. All right. It's just really that the time is now for us to have a conversation. My counterpart Naomi, she has been out for a while, so I'm so glad to have her back in the thick of things, so to speak, and then we decided, as having an active, thriving Grenada Bankers Association, we've seen also some uptick in the Eastern Caribbean Currency Union Bankers Association, right, where we have several committees. The association is much more active, so we are certainly doing our part, in terms of helping to inform the public, about banks and the functions of banks and the why.
There is this notion that banks have hidden fees. Is this true?
Not true at all, because our fees are well publicized.
Yeah.
On our website, when there's any change of fee, it is published 30 days before we could charge a customer a new fee. We must write and says we have amended our fees and charges. And it is not an arbitrary exercise. Every so often we review, not an annual basis. In my experience, probably every 2-3 years, we look to see what has changed in the business, what new regulation and what that regulation, implementation of that regulation has cost us. And then we look at review of our cost structure and how we could recoup. And so in the situation of when we had the ACH, the automated clearinghouse, that brought quite a bit of fees onto banks. And for years, probably, we decided, well, let's see how we could absorb it. Every time you issue a check and it's cleared through that electronic system, there is a fee that's charged to banks. And we would have absorbed it for a brief period. Now is the time, can we afford to continue? That those fees go up ever so often. And so that has been the experience. One thing I want to say is that before we put on any fees or charges, we must write to our central bank, share with them what we intend to do, the rationale for that new fee, or whatever changes, whether we reduce fee on this and we increase there, we have to give them the rationale. And that is reviewed comprehensively by the central bank, not just against what this particular bank is doing, but what exists in the market.
Yeah.
Okay. All right.
And I know our central bank has been looking at the matter of fees, and I know they intend to also play a larger role in how bank fees are set and administered. So that may be the change that's coming.
That's coming. Let me also just ask this. we spoke of the starter accounts, for want of a better term, right? Are there opportunities for customers to get exemptions from fees? And if yes, how do you access this? So we go onto the website, we know the fee is X amount. Is there a possibility to negotiate either lower rates or exemptions from fees? How do we go about doing that if it's possible?
Right. So the starter accounts may be the first step account, or for a young child, one of the names that we have in the market, the honeybees or the right starts, those accounts, we tend to have them as no fee. Because they just coming into the banking space. We're encouraging them to save for the future, to learn about financial management and so forth. And so those type of accounts tend to be gauged as that no fee, and that we have certain limitations and restrictions how they operate that fee. So anybody coming into the banking system can choose that sort of starter account, a transaction account, only to be used electronically. As they go deeper into financial services and may want an account that for investment purposes or long-term planning purposes, then they would be onboarding accounts that have a different fee structure. And then we have those retirees, persons who have passed what we call the age of majority, the major leaguers, and on the core bank side, and we have another name for it, but my product popped into my head. And they will be afforded certain free items because they have paid their dues to society, and this is the time for them to enjoy their retirement and they had on money.
What is the trigger for that? 50?
The last time I checked, I think it's 60.
Okay,
You're too young for that. The last time I checked, I think it's 55 or 60. But I could be subject to omission there. But it's all well laid out on the websites. You go in and you check fees and charges, and you could see the description of each product and the fees attached to it.
What I'm also hearing is that the ECCB has some oversight over the fees that are charged, both in terms of categories as well as rates. Is that correct?
Not loan rates.
The fees.
The fees, yes.
Okay, so there is that umbrella body that we can rely on to say, well, these are legitimate fees and not just profiteering, is what I'm getting at.
At least not predatory.
Not predatory.
Yeah, not predatory, yes.
Okay, all right, fair enough. With the advent of do-it-yourself options, shouldn't the operational cost of banks be further reduced? And I know, Larry, you started to address this by way of the maintenance of the parallel. I know you're a banker, not an actuarial scientist, but when can we anticipate some movement in this direction, and hence the reduction in fees? When can we move to, or when can we anticipate being at a place, as Naomi mentioned, of having less cash? Is there a space where our phone carries our bank account, and therefore, not because we all have phones, we may not have credit cards, we may not have checkbooks, but we have phones. Are we going to get to a place where, like other countries, your money is on your phone and you can pay at a point of service exit?
So yes, I do verily believe that, but of course it depends on the adoption rate that persons transition into cashless or near cashless. So as a result, it then makes sense for banks to reduce, the sort of hard infrastructure with respect to being able to serve customers. I'll give you an example. Of course, as you travel into the quote-unquote first world countries, you go into an office, you go into the branch of a bank, you realize that it is almost devoid of customers, right? So by extension, their footprint, their branch footprint, the size of the amount of persons you have serving them inside is reduced. That said, there was a time back in 1997, I do believe, when the advent of an ATM would have sort of foretold, the firing of staff. Here we are in 2025, right? We've not had staff attrition, staff reduction as a consequence of. Why? Because the technology, the harnessing of the technology, what that does is sort of, I would call, at the moment, there might be what you call an unsatisfied demand, where there are persons who want to transact in that space. They're not doing so because, of course, there are some difficulties. They may find that, okay, I come to the bank, there's a lot of persons in the bank, so I can't open an account immediately. But if I was able to do it online, for example, then if you open 100 accounts for the month, you realize that, whoa, if I can do it online, maybe I can open 150 accounts.
Right.
So then there's so much work for persons who currently open accounts physically in the office. When you get more demand, because you have channels now where persons are able to not come to the office but able to still demand a good and service, which is facilitated through the electronic channels, you find that yes, the opportunity to reduce cost, because you can reduce the size of your footprint in terms of cashiers at wickets. Those cashiers transition elsewhere, but you have more demand. Right. Yes, there is the opportunity, I think, for reduced fees at some point in the future, but essentially it's about adoption. Everyone sort of moving in the right direction in a meaningful way, so that we can enjoy that.
We spoke of the lack of confidence in some of the technologies. Have you had challenges in the maintenance of the operations of some of your technologies? In other words, ATM goes down too regularly, ATM cannot accept deposit, ATM run out of cash. Are those some of the challenges you also face, and hence force a customer almost to be interfacing in the banking space?
So yes, the reliability sometimes of the technology within the office, we say within the industry, we say at times that the ATMs are like children, where you require to service them, take care of them, nurture them, right? And that has been a source of, say, increased also cost, because, for example, on the weekends, you have the teams who are set on call, who has to come out in order to be able to deal with the ABMs. You tend to sometimes have more than one at a location, right? I'll tell a story to say that when I got to the bank, there was some discussion in the boardroom with respect to should we have more ATMs, less ATMs, and so on. Eventually, the board won out, but it's just to say that you do have more ATMs so that customers have more convenience. But that said, you are required to maintain them, right? And that comes with its own operational considerations, operational cost, right? And we have found, though, that when a customer has a bad experience with an ABM at, say, one of the Grandans locations, they can go to St. George's for both of all of the banks, right? So you find that having that alternative elsewhere, that does sort of help.
But it comes at a cost, because you don't have to drive to St. George.
Yes, it does.
In our type of traffic these days.
Yes, indeed.
Right.
But what you find is that customers sometimes are prepared to know that at least the service is available elsewhere. And that helps them, at least certainly with their confidence, to not have to come to the branch during opening hours, because they can rely on the ATM. If it's not working Friday evening, rest assured Saturday morning it will be back up. So it's not a case where, okay, fine, I didn't get cash on Friday and then I don't have the opportunities because the team will come out on the Saturday and Sundays in order to be able to have the ATM up and running, and that's across the industry. Both Republic, Co-op Bank, and ACB.
Okay. Banks have been reporting profits and sometimes increased asset base. How do you balance profits compared to the affordability for customers? I know you have boards that you report to, so you are employees. But how do you strike that balance? Because sometimes as a customer, we hear about increase in fees, but then we see reported profits of, and these numbers we can't even spell out if we see it on a bit of paper. They're so high. How do you strike that balance?
At the end of the day, we sort of look at where the most profits coming from. It tend to be, we will focus on loans. And in a situation where we may have less loan demand, we have the privilege of probably investing excess cash in investment grade instruments to also bring interest income. But the philosophy of any banking institution as to how they want to track their profitability may be based on various things: plans for expansion, plans for investment in more technology. It's never consistent, we just want more profit. They must set the strategy. It might be a 5-year or a 3-year strategy of where the bank wants to go in terms of expansion. In recent years, you've seen the Canadian banks leaving our shores. If we weren't profitable, Republic Bank or Corp Bank would not be able to take advantage of those banks.
And I just wanted to expand on this. How has the departure of CIBC, RBC, Scotia from Grenada impact the banking industry in Grenada?
So I'll start this one, and Naomi can chime in, is to say that we are now in charge of our destiny in the context of when profitability waned, when the indigenous banks, the regional banks, started to outcompete. Then when the returns, were no longer as profitable, then of course, the foreign banks that you just mentioned would have exited. So we, by extension, the stakes are higher because we are in charge. We are the ones who have to provide, the service. You'll call the banks certainly within the industry to be domestically, systemically important banks, meaning that anything that happens to them will have a serious impact on the economy. So as a result, I think what the public will want is for the banks to be able to finance technology, finance investment in research, to be able to remain, I mentioned toughness, being able to have that profit so you can set aside that for a rainy day, not if but when, right? So that you can remain tough, so that you can absorb the shocks, right? So in terms of the stakes have been higher, certainly for us to be able to maintain the proper standards.
Have we seen an increase in costs to your operations and by virtue of that to the customers on the exit from these international banks? Because I know we pay for play in terms of the correspondent banks, etc. So has there been an increase of operational costs to you and by virtue of that the customers?
So I would say yes, but it's in tandem with the fact that our assets have grown by extension, right? So in fairness, it's not just a cost that is increasing divorced from the fact that you have additional business. So you have additional business, you would see an increase in costs. But what that has done is that it has created sort of, I guess the most relatable example I can have is to say that when you have many players in the market, sometimes you survive. You're not thriving, right? So this is certainly an opportunity now to thrive in this environment, but the thriving is not at the expense of, say, the public. The thriving is so that we can be here and we can be better, so that we're here to consistently serve the public, and they can have confidence in that.
If I may add on the matter of cost from the correspondent banks. Indeed, we have seen an increase in cost. Some of the correspondent banks have reported heavier scrutiny when they're exposed in relationships to countries they assume and presume to be weakness in the system for money laundering. And so they use that perceived weakness as higher risk, more fees. So we have seen that gradual push, and some of them have just debanked or deboard banks in the region because they do not want the risk. Those who decide to stay, they stay at a higher cost. So that has.
And this is within the ECCU.
Within the entire Caribbean.
Okay.
Yeah.
Okay.
Some I think was in 23. There was a delegation that addressed the U.S. on Capitol Hill, and the Congress members about how the Caribbeans perceived, and as a result, losing corresponding banking relationships. And there was, something that had to be done because quite a bit of banks were reporting that they're losing those age-old relationships because of the AML legislation.
Okay. Speaking of relationships, and this really will be my final question to you, I bring up the credit unions. I know that they're exploding in terms of their own asset base. Is there a healthy rivalry, a contentious relationship between the banks and the credit unions in this space?
I would say a healthy rivalry. All right, the credit unions provide a service, and Grenadians, members of the public, they do participate, they do enjoy, what is offered by the credit union. So it is a healthy rivalry.
Okay. So final comments. Naomi, I will start with you on the closing comments that you'd like to make to the public, and then Larry, as president, will have the last word. Because the ladies typically would have the last word, but you get the opportunity as president. Naomi?
Yeah, sure. Thanks, Colin. It was really heartening that we were able to have this conversation, because for many years now I've been saying that the banks take on some licks when things happen and things does not happen as public expects, and we say nothing. But in the spirit of advocacy in our Eastern Caribbean Currency Union, we are now encouraged to advocate why banks exist, why they're so important, essential to a strong economy, a thriving economy, a growing economy. Larry, incidentally, is the president of the advocacy committee on the ECC.
Okay.
So he's leading by example, because everybody in all the various islands have been encouraged to do that public engagement,
right,
so that there could be a better understanding the roles banks play, why it's essential, why fees, what the value for money is all about, that proposition, and why the service needs to be continually evolving towards the digital age. Because the world is pushing us there. I don't think we have much choice but to advance our technology to that space. And you talk about how the mobile will become center stage, coming soon.
Okay.
It's going to happen.
All right. Larry, your closing comments?
Yes, so certainly, Colin, thanks again. It's a pleasure to be here. What we hope to do is to inform the public. We hope to be able to communicate with the public. We hope to have this conversation be continuous, right? Because of course, there will always be a different point of view. And what we have to continue to do is certainly to have that conversation and keep the conversation. We will certainly do something again sometime in October. I do believe in whatever form or shape that it takes, because we are here to serve the public. For all intents and purposes, we assist in the efficient distribution of resources, through the fact that the public have confidence to put their monies with us, and we're essentially here to serve.
Thank you very much, Mr. Larry Lawrence, Mrs. Naomi Diali. Thank you for sharing on the work being done by the Grenada Bankers Association, and to you, our listeners and viewers, for spending the last 90 minutes with us as we discussed financial matters, your business, through the various banks here in Grenada. It was an absolute pleasure being with you this evening, and I look forward to you joining this program again next week. Take good care. It's been wonderful having you.